it's really important that if you've been given the gift of the biggest macro opportunity of all time, that really you don't mess the whole thing up by doing stupid stuff.
You've got, I just said, $100 trillion that's now available that wasn't before. And the more the price goes up, the more FOMO, this and that. What's important for me now is that the value is getting really big. And of course, as you know, I call my first funds 10T, 10 trillion, because I think that's where in 2019, when the space was 300 billion, I said, okay, well, the value of all the cryptocurrencies and the value of all the equity is 300 billion. And my target over the next 5 to 10 years, conservatively, would be 10 trillion.
Bitcoin, the world's largest cryptocurrency by market cap, soared to a new all-time high of $70,100 per coin, surpassing its previous peak of $69,100 earlier this week. Describing this week as merely eventful for Bitcoin would be an understatement. It's been a week of remarkable records for the leading digital asset. For the first time in its history, Bitcoin reached a new all-time high before a significant event, achieving this milestone twice in 1 week. Surpassing $70,000 marked a 34.9% price appreciation in just 2 weeks and a 60.5% increase over the preceding month, signaling even more potential ahead. Real Vision founder and CEO Raoul expresses extreme bullishness on crypto asset prices in 2024 and beyond. Pal, a renowned investor and former Goldman Sachs executive, sees the cryptocurrency industry as offering a rare opportunity for investors to generate life-changing wealth, uniquely tied to cryptocurrencies and digital assets. Pal predicts a tenfold increase in the industry to $10 trillion within the next few years, followed by a staggering ascent to $200 trillion. Dan Tapiero, CEO and managing partner of 10T Holdings, shares Pal's optimism, foreseeing the crypto market reaching $1 trillion in the near future. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
One of the things that I've searched for in my investing life, which I think many of you have, is the answer of how you can change your life. Because we don't just invest for the fun of it. We invest because we want that future vision of ourselves to be met. Now, sometimes we don't get there, but it's a really important thing because if not, you kind of feel like you've let yourself down. And in this world, when I started my career, life was a lot easier. The 90s were a great time to be in markets. There was limited volatility when they were. It was a crisis that was kind of tradable, like the Asian crisis. Then we had the dot-com bubble. These were kind of big macro events where you could really make some returns. If I came out of the hedge fund industry, and people made big returns over that period of time. But after that, returns got crushed on everything, particularly after 2008. Just how bank regulations changed the nature of risk-taking, what people were able to invest in, and the expected returns as GDP growth, trend rates came down across the world, as rates came down. And what you found is suddenly the expected returns out of stuff like the stock market just weren't good enough. And it's become a problem for all of us, is the cost of many things has gone up, particularly assets. But our wages generally haven't gone up anywhere near as much. Just look at the houses around you. The one you were trying to buy that doubled in price. But your salary hasn't gone up. And that's all part of this whole idea about how f***ed up our future has become because of this demographic issue and the debt issues of the past. Those have now clogged up the economy and ruined all of our opportunity sets. And we all have to find a way to figure this out. But I found one thing above all others really f***ed my future, and that was crypto. I've talked about the value of having an income and the value of businesses and those kind of things, and how to have lifestyle goals, and that lifestyle is the ultimate bank. But you also want the opportunity to get ahead, to start beating the game a bit. And crypto was the thing that really my future. And it's many of your future now, as long as you don't, sorry to swear so much, this up. It's really important that if you've been given the gift of the biggest macro opportunity of all time, that really you don't mess the whole thing up by doing stupid stuff. And again, it's like hold 80 or 90% in your core major positions. Those should be in the top 5 tokens only. Then have a DJ bad where you want to trade FOMO, meme coins, or whatever you want, NFTs. You can do that, but not with the main part of your portfolio. There's plenty of returns to be made without taking the risk for that 100x. Those things don't come along often, and very few people nail them. But crypto really is the biggest opportunity. It dwarfs everything else in risk-adjusted returns. And that, for me, was the big unlock.
Powell argues that a global economic reset occurred in 2008, as major economies recognized the stagnation or decline of the 2 primary factors driving GDP growth, demographics and productivity. Meanwhile, debts continued to accumulate, reaching 100% of GDP for many economies at various points since then. With central banks resorting to unchecked money printing, the world's economies are now at a critical juncture. Powell asserts that the only viable solution to the GDP crisis is to boost productivity growth, a challenge where crypto technology and the exponential age play crucial roles. This is why the macro analyst holds a bullish outlook on these asset classes. Similarly, Dan Tapiero shares Powell's optimism, particularly towards cryptocurrencies, citing similar reasons. Tapiero's 10T holdings represents $10 trillion, reflecting his conservative estimate for the digital asset space in the near future. He made this prediction years ago when the industry's market capitalization was a mere $300 billion. In a recent interview with Blockworks Macro, Tapiero revisits his trillion-dollar projection, discussing the current state of the cycle in depth.
Look, last time in the peak in 17 was 20,000. When we broke that, we went up to 60. The new high was, or call it 69. I don't care. We just call it 60. So now we just broke 60. We can go to 180. That's 3 times. And why is that? That's not crazy. So I think, 150, 180, I think that's a pretty, if you want to be a little more conservative and say 120, that just means Bitcoin's going to double from here. I don't think that's such a big deal for Bitcoin holders. What's important for me now is that the value is getting really big. And of course, as you know, I call my first funds 10T, 10 trillion, because I think that's where in 2019, when the space was 300 billion, I said, okay, well, the value of all the cryptocurrencies and the value of all the equity is 300 billion. And my target over the next 5 to 10 years, conservatively, would be 10 trillion, which is a 30x. And I thought to myself, no one in the traditional world or nobody I know is going to believe that that was actually my view, right? So I'll just put that into the name of my fund and there it'll be cemented, right? I still think there are huge gains to be made here. So when I talk about the value, Bitcoin going from 60 to 120, ETH going from 3,500 to 10,000, you're talking about the entire value of this digital asset ecosystem, being worth north of $10 trillion. And I think that's at a point where it really is here, right? It's arrived at 10 trillion. It's arrived. And then people from the old world who were not interested when I was talking to them in 2019 and 20 and, for a moment, maybe in 21, they were interested, but then again in 22, 23, it was all fraud and this and that. I think up at 10 trillion, there's enough dollars, there's enough value and enough people and network effect has been created that people really start to do the deeper dive, right, into the space. I don't see anything really different. As I said, we broke the high. You can just very easily say, okay, I can go to 150, 180,000. But realistically, I think the cycle is the 10T cycle by 2025, 26. I think 18 to 24 months. Now it could happen much quicker. And I always like to give myself cushion to be wrong about the price, give myself more time. So I think that's very reasonable. The max case, could we get to 300,000, 350? Certainly possible. Yeah. I don't think this cycle we get more than 300, 350. I think that's probably a bridge too far. I think that's when people would be like, well, this has run too much. It may be worth that, by 2030, but I think it'll be too much and people will have too much embedded gain. So the only supply, I said before, there's no supply response. The only supply that can come to the market are people who decide they want to sell because now they have money to buy the house for their, that they've been wanting to buy, or buy that car, or so people will trade their Bitcoin in for material things.
Over recent decades, the S&P index has experienced significant appreciation, yet its real terms value has barely increased due to the rapid debasement of the dollar. Despite this peculiarity, it's notably more challenging for the average American to purchase now compared to 3 or 4 decades ago. This trend extends to all asset classes, including real estate. Younger generations find themselves working multiple jobs but still struggle to afford what their parents could easily procure years ago. This stagnation is compounded by the fact that real wages haven't risen since 1972. Consequently, relying solely on wage growth for wealth accumulation is deemed financial suicide. Instead, investing in assets becomes imperative. However, not all assets are equal. Assets like bonds may even lead to impoverishment. The focus should be on assets that consistently outperform currency debasement rates. What are your thoughts on Powell's and Tapiero's interview? Feel free to share your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.